Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solutions. What is a hard inquiry and how does it impact your credit? Hard inquiry is when a credit issuer or another lender reviews a credit report as part of your credit application. Their request to review your credit will be shown as a hard inquiry on your credit report and will affect your score. There are some ways that you can actually pull a soft inquiry as well, but generally hard inquiry. Let's say you're looking to apply for a new credit card. Whether you want to expand your available credit, create a credit mix, or simply apply for a credit card online with your desired rewards, you'll often encounter a hard inquiry. A hard credit inquiry or a hard credit check is a natural part of the credit card application process. It happens when the lender or bank associated with your credit card company checks your credit report to see if you are eligible for acceptance. What are hard inquiries? Hard inquiries or hard credit checks occur whenever a lender or bank accesses your credit account. The credit bureaus log the activity, recording the date and the name of the company or entity that accesses it. Hard inquiries refer to when a lender accesses your credit report to evaluate your merit as a borrower. In other words, hard inquiries happen when lenders look at the information in your report to decide whether to approve or deny your credit card application. How do hard inquiries impact your credit? They aren't the most impactful thing. Let me say that again. Hard inquiries are not the most impactful thing that affects your credit score, but they are one of the 5 major factors that make up your credit score. That's because having many hard inquiries on your account looks like you're chasing credit. Lenders don't want to see that behavior from potential borrowers as it reduces their credibility. Here are the 5 factors that impact your credit score. Payment history accounts for around 35% of your credit score. This factor is whether you pay your bills on time and as agreed upon. Credit utilization accounts for around 30%. This reports how much of your available revolving credit limit you are actively using. Credit age accounts for around 15% of your score. This is how long you've had credit and the age of your oldest accounts. Credit mix makes up 10% of your score. Creditors want to see that you can manage different types of accounts, such as revolving and installment accounts. Hard inquiries affect around 10% of your score. This is the number of recent hard inquiries on your report. So you can tell it's not a huge impact. Hard inquiries versus soft inquiries. Not all inquiries show up on your credit report. Not all inquiries that show up on your credit report impact your score. Only those that evaluate your financial creditworthiness do. These are hard credit checks. Soft inquiries, which are purely informational, have little to do with credit and don't have the same impact. They're also not usually visible to lenders or banks, only you. There are, again, sometimes when the banks and lenders can see soft inquiries. So let's look at them side by side. Hard inquiries versus soft inquiries. Hard inquiries affect your credit score. Soft inquiries don't. Hard inquiries count against your credit score for 1 year. Soft inquiries appear only to you on your credit report. Hard inquiries occur during the approval process. Soft inquiries occur during pre-approval process. Hard inquiries happen when you're actively searching for credit. Soft inquiries happen during non-credit screenings and background checks. Hard inquiries require your authorization. Soft inquiries do not require authorization. So let's look at some examples of hard inquiries. They happen when you apply for a line of credit that will impact your financial health. Hard credit checks will affect your credit score. Stay on your credit report for a year or 2. So having too many of them in a short period of time may hurt you in the long run. Credit card companies, card dealerships, banks, lenders, and others may perform a hard credit check only after your written approval. You'll always know when a hard credit check will happen. Examples will require of things that will require a hard inquiry: mortgages, auto loans, personal loans, student loans, credit lines increases. Examples of soft inquiries typically happen for non-financial inquiries and don't affect your credit score. Typically, only you can see the soft credit checks on your report. Soft credit checks also do not need your permission to happen. Though employers will request permission for background checks, creditors can run a soft credit pull to pre-qualify you for marketing purposes. Note that you do have the opportunity to opt out of those soft checks, though. Soft inquiries happen when employers run background checks, credit card companies do a pre-approval, utility companies screen you, you check your credit. Disputing hard inquiries, again, our friends over at creditsanitizer.com have the solutions for this one. You should always review the hard inquiries on your credit report to ensure that you authorize them. If you see something on your report that you did not authorize or approve, you can dispute your hard inquiry by following these steps. Reach out to your current lenders and confirm that they did not create a hard inquiry on your credit. Research the creditor that authorized the hard inquiry. Sometimes they will remove the inquiry from your report. Open a formal dispute with credit bureaus. You'll normally do this by filing a dispute on their platforms, which I don't recommend. Do it by mail. You'll generally need to wait around 30 days before receiving a reply about your hard inquiry dispute. When the credit bureaus reach a conclusion, they will remove the hard inquiry from your report. Again, it's not a major issue. The other thing to remember about the inquiries is sometimes it's seen as prudent. So if you're getting a mortgage, if they run your credit report, if we run your credit report and it's done by 2 or 3 companies in a very short period of time, then it's seen as prudent and does not ding your credit. It is good. It's just goes down as one inquiry. Got to have a lot of inquiries, though, to have it really hurt your report. Remember, credit scores, FICO scores, have a range from 300 to 850. That's a 550-point spread. 10% of that is 55 points. So if you lost all 55 off of your 850, you're at 795. Great score. That is Your Credit Matters, brought to you by creditsanitizer.com. You have a credit report, it's wrong. What are you doing about it?